Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex, and today we're looking at the economic news that has come out for Canada in the last month or so. Today is September 11th, 2020, which is a perfect time to do something like this because in the recent week is when they tend to release economic news that we should and would like to discuss. And at the end of this video, I will also just take us through a few of the headlines, what's going on in the Canadian industry, and maybe some other large companies that should be of focus for a North American investor. Well, I like to keep this short and snappy, so let's dive right into the data. What you're looking at here is an economic calendar of information that has come out in the last week. There are a few key aspects I want to come over here, such as employment change, unemployment rate, and the housing starts. These are all good indicators of the strength or weakness of an economy, so very important to look at just at a macro level for any kind of investor, because the information that you can take away from these will help you make decisions on a higher level basis. So first up, we got jobs and employment. We can see that the Canadian economy created 245.8 thousand jobs in August of 2020. We have seen this ease from the 418,000 in July. It is a positive sign to see that most of the employment gains were in full-time work, which increased by 206,000 compared with a much smaller increase of 40,000 in part-time positions. Looking at the created jobs by sector, we find that the services sector saw an additional 218,000 positions, primarily coming from accommodation, education, and food services. Growth in the goods sector was weaker, with only 28,000 new positions, led by manufacturing and construction. However, we should expect this given many of those that work in these industries were able to return to work in the previous months. Next up is the unemployment rate. The unemployment rate in Canada decreased to 10.2% from 10.9% in the previous month. This was an improvement, but still slightly above expectations of 10.1%. Taking a look at this graph, we can see that we did peak over in May, and we have been on a nice declining trend since then. I don't expect us to return to January-February levels of 5.5% anytime soon, but it is good to see that we're well on our way to doing so. Next up is the housing starts, or in other words, new homes. Let me whip this up real quick here to kind of explain exactly what this is. In a strong economy, people are more likely to purchase new homes. Conversely, people are less likely to buy new homes in a weak economy. This is what makes the new resident construction report, commonly referred to as housing starts, a critical indicator of economic strength. So if we go ahead and we look at the Canadian data, we can see that housing starts went up by 6.9% over the last month, with 262,000 new units in August. This beat the expectations of 22,000 units, and if you saw my video last month, we also beat expectations there too. This is a positive sign for the Canadian economy, and it does give me a kind of indicator that we are heading in the right direction. Always like to finish it up with some headlines. First up, we have the Bank of Canada committing to keeping the benchmark rate at 0.25% during COVID-19 recovery. And while the data we just reviewed is encouraging, the central bank continues to expect the recovery phase to be slow and choppy as the economy copes with ongoing uncertainty and structural challenges. The central bank uses the interest rate as a monetary policy tool. In this case, lowering the interest rate is known as expansion policy. These low interest rates will allow individuals and businesses to borrow money at a cheaper rate. This then allows those to make more investments or purchases, such as houses or cars for individuals, or new projects like construction for businesses. When one pays less in interest, this gives them more money to spend elsewhere, which can create a ripple effect of increased spending throughout the economy. Next up is Cineplex, which is a movie theater, and they are opening 164 of their movie theaters across Canada in the last week of August. This is good news for Cineplex shareholders and also their employees. However, they are opening at decreased capacity and are expected to struggle for the short to medium term. In my personal opinion, I'm quite bearish on Cineplex, not only in the short term but in the long term. I, for one, will not be going to purchase overpriced popcorn and a $9 ice cream, but nonetheless, it's good to see they're back open. Next up is Rogers Dodgers, the telecommunications company, in which a bid was made from a US company to buy Cogeco Communications and then sell the Canadian assets to Rogers, which funnily enough actually assisted me because I was looking to exit my position here, and it just happened to be the day I went to sell, we opened on quite a high, so I got out early and it kind of came back down to earth after that. It was all smiles at Rogers for a day or two until Cogito said thanks for dinner, but put your pants back on, and they will not support the $10.3 billion takeover bid, essentially telling Rogers to kick rocks. There's nothing like a little bit of telecommunications drama. Next up is some very unfortunate news, and I hate to break it to any of you Canadians, but patio season is almost over. They say, how will restaurants survive a pandemic winter? But the real question is, how will I survive the winter? All jokes aside, if you had been to restaurants recently, you will notice that patios is what seems to be full, and there don't seem to be too many people dining inside. It'll be interesting to see how restaurants are able to navigate their way through these issues, and honestly, it wouldn't surprise me if we see many more shutdowns. News like this is fairly negative, and although we did see many of those job creations come in the hospitality, the food services industry, we might actually see another surge of losses in that industry. This obviously would then drive up unemployment again, and we could fall into another problem. But on some positive news, retail sales jumped 23% in June, which although this data is lagging behind, it's great to see that people are out buying more, getting that money flowing out of people's pockets and into the large corporations that need it. Nah, but it actually is good to have money flowing. A little bit of money velocity can help stimulate an economy, so this is good to see as well. Finally, we'll jump over to Apple, and their big news was they topped the $2 trillion mark when it comes to market capitalization. That is truly incredible, and not to mention the fact that they had a 60% rise in their stock price this year. Honestly, Apple is breaking the bank, they're breaking the records, and they're most likely breaking old firmware to make you buy a new one. Well, that concludes my headlines for the month, but let me know in the comments below if you saw any that made you go, oh, damn. Yeah, you know we like to keep these ones short and sweet, so again, thanks for watching. My name is Alex, and you have been watching the Economic News for Canada, September 11th, 2020. Remember to like, comment, and subscribe to see videos similar to this one.